Alright, I've been busting out the taxation videos today. I'm taking a taxation course in fall 2022, and hopefully these videos are helping, will help somebody in their future taxation coursework. This one is probably my favorite formula that I've built so far, or a set of formulas to figure out the self-employment tax and the QBI. A couple things that I also struggled with. Yeah, it seems to be if you watch my other videos, that's probably a common theme. These are all videos on things that I felt were kind of difficult, or at least things that I didn't feel were covered very well in the textbook that I have. So I spent like an exorbitant amount of time trying to figure out some of these things, and so that I wouldn't have to do it again, I created myself some formulas in Excel, and hopefully these things will help you out. This is for the self-employment tax and for QBI. If you like it, please give me a thumbs up and subscribe, and please double check all the calculations yourself before using this for a test or something. Try this out on some of your homework. Make sure that everything works out. I'm not gonna, I apologize if anything's wrong, but obviously I'm not responsible for that. I'm just trying to help you out here. So for the self-employment tax, I added a few things as I did a few additional problems in later chapters, and one of the things was wages from employment and income, because that does affect the calculations here. And then of course the self-employment income, and then the self-employment rate is the self-employment income times 92.35%, and then the total income, which is the total income that's going to be used for the calculations. The reason why it's 92.35% is because half of the self-employment tax is already going to be deducted on itemized deductions. The self-employment tax includes includes the employer's portion of the self-employment or Social Security tax and Medicare tax. So that's already going to be included elsewhere in the tax forms. So that's why they use 92.35, 7.65%, which is half of 15.3%, is already going to be accounted for elsewhere. So in order to prevent you from getting double whammied, that's already deducted here. So that's 92.35% of the self-employment income that's used to determine the SE rate. And then of course the total income, since I don't have any wages in here, is $73,880. If I put in $100,000, now the total income goes way up. But for this example, I'm going to leave that blank for now. The phase-out amount for this is $142,800, at least for the taxpayer that I have. I have the phase-out set to where if the person makes more than $142,800, there won't be any additional self-employment tax, at least not the Social Security portion. Will not continue to increase. Medicare tax doesn't phase out. So I just put that in there just so that it can be used in the formulas. The total Social Security tax base is going to be the lesser of, or lesser of $73,880 or $142,800. So basically, this Social Security tax base that I'm using, it will never be based on anything greater than $142,800. The formula is equals min, parentheses B7, B8 for the two cells that I have here. So that it's going to enter in the smaller of the two numbers. So the self-employment Social Security tax base is $73,880, which is B9 minus B4. So it is the total Social Security tax base subtracting the wages from employment. So self-employment Social Security tax base is not going to be the same as the total Social Security tax base. So if the person makes $100,000 a year in wages, now they've already paid Social Security taxes from their wages. So the Social Security tax base is only going to be on the $42,800 for the self-employment income, if that makes sense, hopefully. So only $42,000 of self-employment income is going to be subject to the Social Security tax, because they've already paid Social Security tax through their employment on the other $100,000, and since it caps out at $142,800, they only are responsible for Social Security taxes through on their self-employment income up to $142,800. If they made $150,000 in wages, then they're not going to have to pay any Social Security taxes. Matter of fact, I should change this to do it right now. It's going to have to be changed to a maximum 0 or B9 minus B4. So I want the greater. Actually, let's change that. Change that to a minimum, since we're dealing with a negative number. Let me pause for a second, and we will be right back. Okay, sorry about that. I didn't want you to have to sit there and watch my wheels turning for a second. But so now I have it set. It is the formula I have now is equals max 0 or B9 minus B4. So equals max parentheses 0 comma B9 minus B4. That's because if the wages are much more than $142,800, then there's not going to be any Social Security tax on the self-employment. So that self-employment SE is going to be 0, and the SE tax will be 0. But you'll notice that the Medicare tax does not phase out. Your Medicare tax base is still going to be based on all of the self-employment rate, $73,880. So let's change this back down to $50,000. So now the person has to pay taxes on all the Social Security taxes, on all their self-employment income again, and they also have to pay Medicare taxes on all of their all their self-employment income, and so their total self-employment tax is going to be the total of B11 and B13, which is their self-employment tax and their Medicare tax. I did not put in here the formulas and calculations for people who make over a certain amount. As you probably learned in your class, if their income is greater than a certain amount, then there's a Medicare tax that gets tacked on again for high earners. That's not considered in this in these calculations. So once again, Social Security tax, the Social Security portion of the self-employment tax phases out at $142,800. So if the taxpayer has has $120,000 in self-employment income, then in wages income, then they're only going to have to pay self-employment tax on the Social Security portion up to $22,800, and the Medicare tax is still going to be based on the $73,880. So here's the formulas again: B5 times 92.35%. So B5 is self-employment income. The total income is total of these two. The phase out is just no formula. It's $142,800. I made all the cells that don't change gray. They all have formulas or numbers that shouldn't be changed, so that you don't type anything into them. Total Social Security tax base, $142,800, which is the total income, the lesser of the total income or the phase out, whichever is smaller. In this case, it's $142,800. The Social Security portion of the self-employment tax is based on $22,800. The self-employment tax is going to be B10, which is the Social Security tax base for self-employment income of $22,800 times 12.4%, and Medicare tax is $73,880, and that is the total employment. Actually, I could probably just make this equal to the total SE rate, but I chose to do it the hard way and take the wages from employment and subtract it from the total income to come up with $73,880. The Medicare tax is just 2.9%, so that combined with the SE tax or Social Security tax is 15.3%, and the total SE tax is $4,969. And then the QBI, I'm going to make another video for that because this video is already much longer than I wanted it to be. But hopefully this will help out with your self-employment tax calculations. Good luck in your course.